Welcome to Unit 14. In this unit, we look at preparing consolidated financial statements. There are really strong links between this unit and the previous unit on business combinations, so we recommend that you only begin this unit after completing the previous one. So what is consolidation? To explain this concept, let's return to the parent and subsidiary business combination we saw in the previous unit. Remember, we have P, the parent, which has gained control by acquiring 80% of S, the subsidiary, which means there is a 20% non-controlling interest. Consolidation is the process of presenting the financial statements of all entities within a group, in this case P and S, as those of a single economic entity. In other words, we need to show 100% of the parent and the subsidiary in the consolidated financial statements, even if we only own part of the subsidiary like in this example. Finally, we would also have to recognize as part of the equity in our consolidated financial statements any non-controlling interest. So how do we record consolidation journal entries? Consolidation journal entries are generally made on a consolidation worksheet as shown. You can see the two columns for the parent and the subsidiary. Think of those as coming directly out of their respective general ledgers. We add the two columns together line by line, but that's not the final consolidated financial statement values. We then have to subtract and adjust by making various consolidation journal entries. So here, for example, we first add the sales revenue figures of the parent and the subsidiary to get 6.9 million. Then we need to eliminate intragroup sales during the period of 1 million to end up with a consolidated sales revenue amount of 5.9 million in the consolidated financial statements. The important thing to note here is because these consolidation journal entries are made on the consolidation worksheet, they do not alter the general ledgers of the parent or the subsidiary. So we often refer to them as notional entries. This means that consolidation journal entries do not carry forward to the next accounting period, and therefore need to be posted at every reporting period. So you will need to take care when recording consolidation journal entries that reflect a transaction or an event that happened in an earlier year. We will now take a look at some of the key consolidation journal entries you will come across throughout the consolidation process. The consolidation process starts with an acquisition analysis. This is where goodwill is calculated and was the main focus of the previous unit. From this analysis, any acquisition date fair value adjustments we have to recognize through a consolidation journal entry. In the Fin module, we recognize these entries using a business combination valuation reserve or BCVR account. Also, because we are making these fair value adjustments at the consolidation level, any depreciation or amortization on those fair value adjustments are also made through consolidation journal entries. Next, the original investment in the subsidiary that the parent made when it acquired its interest must be eliminated every time we prepare consolidated financial statements. Remember, consolidation is showing the group as one economic entity, so an entity cannot have an investment in itself. This elimination of the investment asset entry is also where the goodwill or gain from a bargain purchase is recognized. The only exception is when using the full goodwill method for a partly owned subsidiary. In this case, goodwill is recognized as a separate BCVR entry. Moving on, if there are any intragroup transactions, for example, sales occurring between the parent and the subsidiary, we have to eliminate these sales along with any unrealized profits. Again, think back to the one economic entity concept. You can't be making a profit out of transacting with entities within the same group now that you are one economic entity. So the unrealized profits from these sales must be eliminated along with any tax effects. Similarly, we also have to eliminate dividends paid by a subsidiary and any intragroup balances such as intercompany loans. Lastly, when we have a partly owned subsidiary, you will have equity in the subsidiary that is not attributable to the parent. but attributable to the non-controlling interest. As we include 100% of a subsidiary's net assets in the consolidated financial statements, we must not forget to allocate the equity that is attributable to the non-controlling interest as part of the consolidation process. Make sure to watch the detailed video on how to calculate and record the NCI for further guidance on this step. Now, a really important concept to grasp here is that the effect of all these consolidation journal entries that we're making each reporting period is that what remains in the consolidated financial statements is the parent's share of the post-acquisition earnings and reserves that it's made from the subsidiary since it gained control of it. Think of it as the parent buys an investment in the subsidiary and it wants to tell its shareholders through the consolidated financial statements, look at what the subsidiary has done for us since we gained control of it. So that's what our consolidation journal entries are trying to show. Not only are we bringing in all the assets and liabilities of the subsidiary, we are also trying to show the profits and reserves that the subsidiary has earned for the parent post-acquisition. The remainder of the unit covers some other issues you may come across in a consolidation. These include preparing separate financial statements, assessing goodwill for impairment for partly owned subsidiaries, and consolidating a foreign subsidiary. Make sure you read through the examples in the CSG to understand these concepts. We hope you found this overview helpful. Make sure you watch the other more detailed consolidation videos and work through the embedded examples in the CSG and the worked examples so that you are able to master all the different types of consolidation journal entries. Best of luck and thanks for watching.